Hey everyone, welcome back to Corporate Decoder. Today, Liquidia Corporation just filed an 8K about their annual shareholder meeting, and I am seeing 3 key outcomes that matter for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just confirmed the election of directors. The appointment of their accounting firm and advisory vote results on executive pay. Liquidia Corporation is reporting on their annual meeting of stockholders that took place on the 16th of June 2026. This is where shareholders get to weigh in on important company decisions. Their common stock is traded on the Nasdaq stock market under the ticker LQDA. This tells us where you can find the company on the stock exchange. Looking at the context around this filing, we see that Liquidia is a specialty and generic drug manufacturer with a significant market cap and a rather high P/E ratio. Recently, there have been some positive headlines around the stock's technical score and its momentum alongside news of directors being awarded shares. Top institutional holders like Farallon Capital Management and Callaghan Partners are keeping a close eye on the company. The main event here is what happened at that annual meeting. Shareholders were asked to vote on 3 main things. First, they voted to elect 3 Class 2 directors for a term that will last until the company's 2029 annual meeting. Second, they voted to approve PricewaterhouseCoopers LLP as the company's independent registered public accounting firm for the year ending the 31st of December 2026. And third, they held a non-binding advisory vote on the compensation of the company's named executive officers, otherwise known as the NEOs. This kind of vote is often called a say on pay, and it allows shareholders to voice their opinion on how much the top executives are being paid. To give you some perspective on who gets a say, on the 20th of April 2026, there were over 88 million shares of common stock eligible to vote. A quorum was met, meaning enough shareholders were present, either virtually or by proxy, to make the votes count. A quorum means that at least 30% of the company's outstanding stock was represented. In this case, over 67 million shares were represented, which is a very strong showing. Let's look at the election results for the directors. For Katie Riley-Govern, there were 41,448,383 votes. For her election, 3,484,195 votes withheld, and a significant 22,546,609 broken non-votes. Ramandeep Singh saw 411,583,53 votes for 377,4225 withheld, and the same 22,546,609 broken non-votes. David Johnson received the most for votes at 4,487,4399, with only 58,179 votes withheld, and again 22,546,609 broken non-votes. The high number of broken non-votes is something to note. These are shares where the broker holding the stock did not receive instructions from the beneficial owner and therefore could not vote. It effectively means that while the shares are outstanding, they did not directly participate in the vote for these particular proposals. However, all 3 nominees appear to have been elected, given the number of for votes significantly outweighs withheld votes even when considering broken non-votes. Next up is the ratification of PricewaterhouseCoopers LLP as the independent registered public accounting firm. This is a pretty standard procedure. The results here show overwhelming support, 672,798,78 votes for, only 183,739 votes against, and a mere 15,570 abstentions. This strong approval indicates that shareholders are comfortable with the company's choice of auditor for the upcoming year. Now, let's talk about the say on pay vote. This is where shareholders express their general feelings about how the top executives are compensated. The results here show 4,427,0299 votes for executive compensation, 612,749 votes against, and 49,530 abstentions. There were also 22,546,609 broken non-votes, similar to the director election. While there is a majority of for votes, the number of against votes, coupled with the broken non-votes, suggests there might be some shareholder sentiment for a closer look at executive pay packages. It is important to remember this is an advisory vote, so the board is not legally required to act on a negative outcome, but it does carry weight in terms of shareholder communication. Finally, the filing concludes with the standard exhibit information, including the cover page interactive data file, which provides important information in a machine-readable format. The report is signed by Michael Casita, who holds the dual role of Chief Financial Officer and Chief Operating Officer, and was signed on the 17th of June 2026. The day after the meeting, looking at this filing in the broader context of Liquidia Corporation, The election of directors and ratification of the accounting firm are standard governance procedures that pass with strong support, which is good for stability. The advisory vote on executive compensation, however, shows a mixed signal. While the majority voted in favour, the notable number of dissenting votes and abstentions, alongside the broken non-votes, might indicate some level of shareholder concern or a desire for more transparency and justification regarding executive pay. This isn't a red flag that screams immediate trouble. But it is something management and the board should certainly monitor and address in their communications with shareholders. For a company in the healthcare sector, like Liquidia, investor confidence in leadership and governance is paramount. The fact that key institutional investors are watching closely, as seen in the research context, means that these kinds of votes can have a ripple effect. The risk I am watching is how the company addresses shareholder sentiment on executive pay to maintain alignment and confidence. What I am actually looking for is continued positive operational and clinical development news to support the current valuation. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord for more.